5 years ago in 2017, Toronto homes in the suburbs saw sharp price drops. What's the same and different this time, and how was the real estate market in June? That is what I'm going to discuss in this video, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Welcome to my channel where we love talking about real estate and all things in and about Greater Toronto area, and we would love to take you along the ride. So hit that subscribe button and the little bell icon so you get notified every time there is a new video uploaded. 3 months ago in March of 2022, we saw the early signs of a slowdown. At the time, all of the monthly statistics were still showing a housing market on fire, but on the ground trends were telling a different story. 3 months later, Toronto's housing market had the lowest sales volume in 20 years, aside from 2020 during the first months of the COVID-19 lockdown. This time, one of the big factors behind the 20-year low in sales volume last month are the rapidly rising interest rates and the expectations that the rates will continue to increase in the months ahead. Notably, this factor is a bit different when it comes to the timing of its impact, as the Bank of Canada itself acknowledged. When we adjust our policy interest rates at the bank, we don't expect immediate results. It usually takes 18 to 24 months to see the full effects. Given this, the decline in the housing market we are seeing today is likely just the start. If we do end up seeing a very sluggish market in the years ahead, it will be type of the market that Toronto and the Greater Toronto Area residents are not used to seeing. High inflation, rapidly rising interest rates, and a volatile housing market that has seen a sudden rapid decline in home prices has made it harder than ever to make smart real estate decisions. It is a lot easier to feel confident about buying or selling a home when prices are trending up, and far more uncertain and anxious when prices are trending down. To stay apprised of the rapidly changing market conditions and how these changes can impact a normal person, please subscribe to my channel as I discuss real estate topics all the time. The sudden decline of sales and prices in Toronto's housing market over the past few months has many people comparing today's market to the similar decline in home prices Toronto experienced in 2017. So how does the situation today compare to what we have experienced then? The Toronto area housing market experienced a housing bubble in 2015 and 2016, in which the low-rise suburban market saw the most rapid price appreciation, much as we have seen during their most recent housing market boom seen during the pandemic after the initial period of the first lockdown in 2020. The bubble then peaked during the first quarter of 2017, just before the province of Ontario introduced a foreign buyer tax. It is important to note that in this case, consumer attitudes towards the new tax proved as potent than the tax itself, as buyers started to step out of the market and sellers rushed in to sell their homes a month before the tax was implemented. This behavior was no doubt spurred by worries about what had happened a year previous in BC, where the implementation of a foreign tax buyer led to a decline in house pricing in the Vancouver area. In Ontario, these worries became a self-fulfilling prediction as the market became flooded with new listings virtually overnight, just as many buyers moved to the sidelines expecting prices to be lower in the future. Many of the people selling their homes at the time found themselves in the stressful position of needing to sell their current homes in order to finance the recent purchase of another home at the much higher prices the market was experiencing only weeks earlier. The trends we are seeing in the Toronto area housing market today have a number of similarities to what happened in 2017. I am going to discuss lessons learned from 2017 Toronto housing bubble, so don't forget to join me next week. Toronto's housing market was incredibly competitive during the fourth quarter of last year and moving into the start of this year, with more than 8 of 10 homes receiving multiple offers and selling for above asking price. But then demand gradually started to cool down in late February. Homes started getting fewer showings and receiving fewer offers on their offer night than similar homes had received just weeks earlier. Since early March of this year, weekly sales volume have been trending down when we would normally expect to see sales volume trend up as we move into the spring market. I have heard a lot of real estate agents who have been suggesting that just like 2017, we will see home prices stall by the summer and then things will be back to normal by the fall market. While this, of course, is possible, I personally would not jump to the conclusion that this year market will end up like that of 2017 just because there have been some similarities in these past few months. This is a different time, and the economics and housing risk ahead are considerably greater than they were 5 years ago. Canada's inflation rate is much higher, sitting at 7.7% as of May 2022 than it was in 2017, and Canadians' households are far more leveraged today as home prices have continued to climb, and now interest rates are increasing at a rate we have not seen in decades. All of these factors, along with global factors like the war in Ukraine, which has been cited for rising fuel and food prices globally, are making today's housing market considerably more vulnerable than it was in 2017 when general economic conditions were far stronger. And now I'm going to discuss how was the market in June of 2022 for the Toronto and the Greater Toronto area. A total of 6,474 homes traded hands last month, down a considerably 41% from last year's record-breaking activity and 11% below May sales level. Prices, however, continue to buck their previous growth trend, sliding 5.48% between May and June, a price difference of $66,552 to an average of $1,146,254. Compared to the price peak observed in February, the average GTA abode now cost $188,920, less, declining by 14%. Prices are still up 5.3% from a year-over-year perspective, but that annual gap is dwindling down by the month. Deep year-over-year sales declines were seen in both the 416 and surrounding 905 area markets. A total of 2,422 sales occurred in Toronto, down by 36.8% compared to the same time frame in 2021, while the average price rose 6.81% to $1,152,175. As has been the trend, slower sales and price growths were more pronounced outside the city. 905 transactions fell by 43.8% year over year with 4,052 deals, while the average price rose just 4.4% to $1,142,715. That phenomenon can also be observed in the MLS Home Price Index, a benchmark of the most typical homes sold in the region, which rose 17.9% year over year, down from 23.9% growth recorded last month. Toronto Real Estate Board has also noted that price growth was driven by the most affordable home types such as townhomes and condos, as the buyers who are still participating in the market seek out lower priced options as their mortgage buying power shrinks. Home prices have been impacted by both the affordability challenge presented by mortgage rate hikes and the psychological effect wherein home buyers who can afford higher borrowing costs have put their decision on hold to see where home prices end up. Expect current market conditions to remain in place during the slower summer months. In my personal opinion, home prices are going to continue to decline. How much and how fast, that is the answer nobody does know. And this is it for this week. Don't forget to join me next week. Until then, stay happy and stay safe.